I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, and we are now at April 22nd, 2025, about 6:20 p.m. Central Time, and what a day. You've taken the gold market down from intraday, a 3,500 level, down to 33.16, almost a $200 an ounce drop. Lickety-split. I was looking today at CNBC, and Carter Worth had an interesting analysis that he did. He took 1980 gold prices when the high was made and took inflation adjustment to it. And he claims the market went up when it went up over the 3,500 level. It was almost to the dollar where it peaked then, and the market coming back. Good analysis, great way to do it. So, I guess that's one way, but does it mean anything? I don't think so. Unless you're saying if you buy it here, you've got to wait 25 years more for it to get back if the market drops from here before you get your money back. Is that what he's inferring? I wasn't quite certain what the analysis was there. And that's not critical. I really admire his work a lot. He also put on a chart of 150-day moving average in gold and looked at how much prices are above it. It's over 25% distance from it. And when that happens on a regular basis, the market does correct rather sharply. Well, he's getting that right now, so you can't say that he's wrong on that. The stock market. The market's liking that the president has said he's not trying to fire Fed Chair Powell. Again, which president are we talking about here? Because it is a Jekyll and Hyde scenario. I think somebody had a talk with the president and said, you can't fire him. Why not just stop that? It's not taking the markets where you want it. You can make him the bad guy any way you want, but let's stop. And maybe that's going to get something going. Energy markets up a little bit, and you've got to look at the new sanctions the U.S. put on Iran. They hit one of the major men in the oil industry in Iran, both his natural gas, his oil operations, with new sanctions. And the squeeze, the pincers, as I write about it in my evening report, are coming on at this point in time. So things to look at. I put out a timely report on the dollar index as to is the market run its course on the downside. And I'll leave it at that. Just go to irapstein.com, look at the top left, and you can take a look at that, and we'll take it from there. The report says it all. Now, in terms of information, tomorrow you get the Mortgage Bankers Association at 6 a.m. The S&P Global Group, they're going to come out and release the prelim April manufacturing sector PMI, and that's at 8:45. St. Louis Fed President Muslim, I think that's how you pronounce his name, and Federal Reserve Governor Waller will attend the Fed Listens event. That's the Fed Listens at 8:30 a.m. I don't know what they're listening to. I hope it's soothing music, but we'll see if they say anything there. U.S. March new home sales data comes out at 9 o'clock. You get petroleum stocks at 9:30. You just had the API numbers come out. I figured I'd show them because they're a little bit friendly, and that helped, I think, the energy rally just a little bit tonight. I have a lot more to say in the financial update. All right. So as we go to the marketplace, you look at how the market is rallying. You can see on a closing basis, not intra highs and all that. If it finished here, you're still up 0.73 for the week. Okay. When you take a look at what the market did here, a big problem. You went up, cleared the 3,500 level, and boom. I don't know that that's the top or not the top. What I do know is this has been a runaway market to the upside. Is it overdone? Probably. Is the market building in everything that the world's going to go wrong with these tariffs? Probably. Did people start talking 4,000 gold? Yep. So they get caught. And that's very typical. And whoever bought up there, if they held on, they've got a world of pain right now. Remember, that's a lot of money. The pattern, though, hasn't done any damage to the chart. You still have a pattern of higher lows and higher highs. Where's the 18-day average? At 3196.5. It's just approaching the last break low of 3208.30. It'll take a day or two for that to catch up with it, but it will. You're now seeing bigger support showing up at 29 to 12, but that's so far away. Why be bothered? The big question that traders are going to ask themselves is momentum right now. And here's what I'm saying on momentum. Unless you close under 79, I think the traders are buying this market. And I think they're buying it right in this zone. I think they'll bail if you get the settlement under 79. And I think they're looking to see, can the market retrace and maybe try to hit the upper Bollinger Band one more time. That's my guess on the market. Is it a safe trade? There are no safe trades now in gold. If that lets go, you can go to 3,200 before you know what's going on. So that's my warning signal to you. If this was further under 79, I'd feel better in saying, no, you shouldn't do anything there. It might be later tonight. I don't know. In the gold-silver ratio, well, you got up here into the 104 area. You're backing off, but gold is still stronger than silver. When you look at silver, it turned the swing line down. You now have lower highs, lower low. The market ran right into where I predicted it would have a hard time, the combination of the 200-day, the 100, and the 18-day average of closes. And you should say, but it did get over them. I agree, but it hasn't gotten away from them in any manner at all. We then get to the copper, which has had the stretch effect. Once the market cleared here, it opened the door for the 18-day average, and today's action certainly was a surprise to me. I didn't think the market being as overbought as it was, and I'll show you this, would extend the way that it did today. Here's the market, and then it got overbought intraday, and it held on. So that's not bad action for the market. Support back at 471. From here, that's 23 cents. The copper is moving in ways that trying to take a normal risk in a market of a few $100 doesn't work right now. It's too volatile. Keep that in the back of your mind. Platinum is starting to drop back just from what we talked about here. I thought you'd have resistance, and we mentioned it. Between the 100-day and the 18, you did, and you're void of a trend. Now you got a higher high, lower low. And in the dollar, I think you're going to get pro-selling if you get a big up tonight into the market. And I think they'll start hitting the market saying, what has really changed? And that is the issue. Tell me what has changed between yesterday and today. Not one trade deal is made. We have a calmer president that's not going after the Fed chair, but what has changed? They keep saying, oh, China deal, that's going to be made. Nobody's talking to China. I'll get into that in a few minutes as I go into my financial update with you. Remember that I've got the currency report on the dollar. I cover in it, and I think it's so important, what our price counts do. And we've gone down to the fourth price count. It's very rare you go to a fifth. It's way down. It'd be at the 88 level. That's not to say it can't happen. It's highly doubtful. So you're in a zone of short covering and where a market spins its battle. However, it hasn't proven to me on the chart that it has bottomed out. And that's the important thing. So go into the website, iraepstein.com. Take a look on the top left. You'll see the dollar report. It'll come off the board by Thursday. It'll be gone. So I just put it up yesterday. It'll be off on Thursday. You can go right through here. You'll see an icon up there. Give it a click if you're watching. And I'll catch up with you all first thing in the morning in my other updates tonight.